As you can see, this is an ascending triangular breakout. See, after price entered here, you see there was a first breakout here. Price came into the triangle, tested the support, came all the way to this point, reversed back and almost tested it before going out again to break it out and coming to close right inside. After that, price tested the resistance, came down, tested the support. There was another breakout and price came, tested the support and broke through it. So we have first breakout here, another first breakout here, another first breakout here, and we have a real breakout here. At this point, depending on whatever system we are trading, let's say we want to make an entry here, decide that we are entering this trade around here. The question is, where should our stop loss be? If we enter here, do we place our stop loss right here, or should we place it above this resistance here? And if you are placing it above this resistance here, what happens to this resistance and what happens to this resistance? Should we ignore them, or we should watch out for what the market has been doing? So at this point, if our entry is right here, the best place to place our stop loss should be above this nearest resistance here. So our stop loss should consider this, it should be somewhere here. Then our target should be around this zone. So if you look at it very well, if our entry is here, our stop is here, and our target is here, then our risk to reward ratio is still about 1:2 or thereabout, roughly 1:2. So it's always best to listen to what is on your left hand side before you place your stop loss. If you are placing a stop, watch out for what is happening, because we are placing our stop based on support and resistance, and the best thing is to place your support slightly above the resistance or the support. Another scenario I want us to look at is trading reversal pattern. Let's say you have an M structure such as this, and you want to enter this trade. If you are entering this trade, you will not consider this part, because this is the leg at which we look out for weakness in the chart pattern, in the candlestick pattern, before we decide to sell this trade or buy. So at this point, let's say this leg is somewhere here and we are considering buying. Let's say price is around here. Price is currently around here. So if price is here and we want to enter this trade, around here, our entry is here, then where should our stop be? The best place for us to place our stop would be to consider this previous resistance and place our stop slightly above it. If you place our stop slightly above it, it will be a good sign for us, because it will give the trade enough room for price to move up and down before it finally heads in a direction, or before we get taken out. So let's say if our entry is right here, price will not just come down in our favor all at once. Price might come all the way and break this previous resistance here before it heads down. Sometimes price might even break our stop loss, and if our stop loss gets broken, then our trade has been invalidated. At that point, we are taking a loss. We are selling our position at a loss. So price may take us out of the trade before heading in our direction, or it may come close, very, very close to our stop loss before heading in our direction. That is why you don't have to place your stop loss where the previous support is. You have to give it some room, because sometimes it breaks through the support. It's not all the times, it's just sometimes. Other times it might not even go that far, it might just stop around here after going beyond your entry before heading in your direction. So let's go into a rate chart example so that I can show you what I've been talking about. So this is a daily time frame of British pounds, Canadian dollar. Let's say we identify the support that have been holding here. You can see the support has been holding. We're expecting a breakout to the downside here. What do we do? If we have something like this, and we've noticed here, we've seen after this resistance was formed, price dipped, and you can see it rallied up here. But as it is now, you can see this bullish rejection candle here, and after that you have 1, 2 bearish candle close. So at this point, let's say you decide to make an entry around here. At this point, you've decided that you are going to sell this pair. The question is, where should your stop loss be? And at what point would you say is enough? I'm not going to be in this trade anymore. So the best place for you to place your stop loss would be above this previous support level. Then possibly you may expect to take profit. Your target level may be here or even lower. Let's say you take this trade now with your stop loss being here, your entry being here, and your target being here. If you take this trade, what's going to happen? After you enter the trade, see, price formed a bullish candle close and started going in your direction. Can you see? At this point, your stop loss is at risk. Instead of price to go in the direction you want it to go, it's going the other way. And you can see, but after, you can see here, after price came and almost tested this previous resistance, you now decide to head in the direction you want it to go. And what do we have? You can see price keeps going. At this point, we have a breakout. Finally, there is a breakout, and price is now heading in your direction. See, price keeps going until your target gets hit, and price even went beyond your target. So you can see, this is how to place a stop loss. You make sure you consider the previous resistance level and place your stop loss slightly above it. You have to take it into consideration too. When you enter at this level and your stop is here and your target is here, your risk to reward ratio is not that good. But at this point, it's not that bad because this is more than 1:1. It's about almost 1:2. So let's say your target is here, then it would have been much more better. Your risk to reward ratio would have been higher. But in this case, the stop loss placement was okay and the trade went the right way. Another example I want us to look at is that if you have something such as this, an M structure, and you believe that price is going to head this way, a bullish market move is going to occur. And let's say you decide to buy at market price, that means you are buying right here. So at this point, where would your stop loss be? As you can see, buying at this point is not that far from the nearest support, the previous support here. So placing your stop loss around this zone should be a good place. So let's say you enter at this level. What do we have? See, you can see price broke the previous support level, and what happened? It started going in your direction. You also came down, retested the new established support before heading upwards. So keep watching it. See, so over several days, let's say more than a week, price keep coming to test the new established support level, but never testing your stop loss. And see, after that, price went in your favor. Price went in your favor, and you can see how it is. So before you can reap the reward, you need to set the proper stop loss. Sometimes your stop might get hit, yes, but before you set the stop loss, you need to consider the previous resistance before setting your stop and giving enough room for price to move in your direction. The next example that I want to show you is like, let's say you have something as this. As you can see the previous support here, and price has come down to test that support already. See, this is the previous support. Price has come down to test it, and it held. Because this support held, you decide to enter at this level, which is okay. But one thing you need to know is that when you are entering, you need to consider all the previous supports and resistance depending on the direction at which your trade is going. Now you can see we have another support right down here. We have this support, we also have this support, and we are trying to enter a bullish trade. So at this point now, let's say our target is going to be around here. We are trying to place our target around here. As you can see, yes, placing target around here and our entry here, if the stop loss is here, then it's a good place to place our stop loss. That is, if we are thinking based on how much we are going to spend for this trade, because risk to reward ratio wise, this is like 1:3 or thereabout. But if we decide to place our stop loss here, then you can see the risk is more than the reward. The risk here is more than the reward here. So it's not a good place to place our stop loss. So let's say we place our stop loss here. What happens? After the entry, price started coming against us, and price eventually broke through the stop loss. So at this point, this trade now has failed because price has come to break the stop loss. So what happened next? You see, after that, price came further before forming a bullish rejection, and it keeps going. The stop loss got taken out because we do not consider the previous stop, which is this. But other than that, what is wrong with this trade? You can see after this rally and this retracement, you can see price wasn't moving much. There isn't a clear direction. So this is a raging market, and if you've been watching my video, I told you taking trade in the raging market is one of the worst way for you because you can easily lose so much money. So it's not good taking trade in the raging market because there is no clear definition of where price is going to go. As it is, this is a bad market environment to take your trade, and putting your stop loss here is very tight. It's not the right place for you to put your stop loss, and putting your stop loss way down here would have been a bad choice because your risk to reward ratio is bad. The risk is way more than your reward, so it's not a good place to place your stop loss either. So your stop loss should have been somewhere here, but at the same time, the market environment, you are in the wrong, trading the wrong market. So if you have a market that is ranging this way, the best thing for you to do is to look for a better opportunity. And if you don't have a better opportunity, it's better for you to just close your laptop, whatever you are trading with, and go do something else. Maybe go and exercise yourself or play with your family. So this is how to set stop loss. If you have not watched my previous video on how to set stop loss based on account balance percentage, then check it out. And if you don't know how to set a proper loss size, either manually or by using an EA, I have done a video on that, so check it out and see how to use position sizer. It's an EA that helps you to calculate your lots, your stop loss, and your target. So please don't forget to give this video a thumbs up. If you don't already have, please subscribe to this channel and turn on notification. Thanks for watching. See you in the next video.